Budget 2025 is finally done and dusted, although we were a bit taken aback at the initial postponement. Thankfully, Finance Minister Enoch Godongwana said his piece yesterday, and today Momentum Investments brings you this live post-budget broadcast in which we'll spend the next hour deconstructing the budget in detail for you. I'm joined by Chief Economist at Momentum Investments, Sanisha Packirisamy. Looking forward to this discussion, Sanisha. And of course, you at home or wherever you're watching from, please feel free to send through any questions you may have. And towards the end of the discussion, I'll try to include as many of those as possible. So, Sanisha, the postponement wasn't ideal, but at least the budget did happen yesterday as planned. Has the minister managed to balance all the demands made on him in your view? And would you say there's consensus on the basics?
Sure. So, Jan, I think, this time around, we can buy into the argument that we are seeing a nation building around a consensus view. And I think that with Budget Take One, what we saw was a willingness from all the parties within the Government of National Unity to try and build a consensus around a fiscally prudent path. So I think that's the positive takeaway. I think what is a bit more of a negative takeaway is that we did detract a little bit around the transparency of the budget, and that can be a little bit of a knock to investor confidence. It can be a knock to citizens' confidence when something like a VAT proposal wasn't necessarily in the public discourse up until that point. And I think that worries us a bit. Now, historically, South Africa has actually marked itself quite high on the transparency level of the budget. There's a Washington group that looks at the Open Budget Index, and we've actually scored fourth from global peers on this basis. So I think that detracts a little bit from that process. And of course, there was a lot of pressure to get a budget through this time around, because if Take Two didn't happen, that would have been a massive knock to confidence.
Yeah, absolutely. And I know the minister here is balancing two pretty tough processes. He's got the technical process on the one side and the political process on the other side. How do you think he balanced the two?
Well, definitely better on the technical process. So, we had a budget document, we had the budget speech that was actually crafted just before when it was supposing to be announced under Budget Take One. We saw that even in the second iteration of the budget, they did actually go through the entire budget to make the additions where necessary. They updated a lot of the data in there. And I think the technical process behind the budgeting process in terms of all the weeks of preparation that go into it, we can't fault them there. I think around the political aspect, this is where the nervousness comes around in terms of actually getting political buy-in, in terms of trying to get a budget together and try to consolidate our finances over the next couple of years.
Well, that's the tricky part. I think before the GNU, most citizens assumed when the budget was done, it was carved in stone, and that was how it was going to stay. I think this interaction with the GNU over the budget this time has made a lot of people realize that it's a work in progress and that it actually happens in phases. Just talk us through what happens from now on, Sanisha.
100%. So most economists now know what the money bill is, which we didn't really have to think about before. So, once we get the speech, you kind of forget about it until the next budget round. So typically what actually happens in the parliamentary calendar is that you do have these committee meetings that take place to look at the fiscal framework that has been proposed, as well as the revenue proposals and expenditure proposals. So there's a parliamentary debate that happens in the next couple of months from that budget speech. Right. From there, you then get the public consultation. We then have committee reports that are drawn up, and that then has to be approved by the Standing Committee of Finance. And so that means it has to be passed by both houses in Parliament, so it's your National Assembly plus your National Council of Provinces, and only from there does it then get adopted, and you finally get the appropriation bill, which then allows government to actually give portions of that funding to the various departments. So it's quite a lengthy process.
It certainly is. I mean, some people are wondering what happens if the budget doesn't get passed.
So we do now have, a bit of a window,
yeah.
So 16 days from when the budget speech happened, in order for the DA to come back and say, here is an alternative. So they basically have this budget to then either accept or amend it. And so they would like to amend that, but there needs to be some sort of solution proposed that is viable in the context of Section 8 and Section 9 of the Monetary Bill. And of course, that means then that we can't necessarily, have the debt number numbers escalating too far, or perhaps, trying to push a lot of the fiscal consolidation far into the future. So there are a number of aspects that need to be ticked before the DA can actually come up with a viable alternative that then has to be passed again by the National Assembly and the National Council of Provinces.
Right. And tomorrow, I assume, is important because there's this joint committee sitting tomorrow. And I take it that the 16 days kicks off from that point. Am I right?
So the 16 days actually kicks off from when the budget speech is announced.
That's interesting.
And what basically happens at this committee is now whether they're going to accept or amend what has come out of the fiscal framework and the proposals.
So let's talk about the VAT issue that divided the camp. I mean, do you think this 0.5 percentage point increase was a good compromise, viewed together with the fuel levy staying the same and this zero-rated VAT or zero-rated basket of goods being expanded at this point?
It's quite interesting that VAT is getting a lot of airtime. And even with the 0.5 percentage point increase, government hopes to get around 13.5 billion rand. But what we don't really hear a lot in the press is that they also expect to get 18 billion rand from bracket creep. And so that is basically when you don't adjust your income brackets to cater for the increase in taxes. And so that's really, I guess, the silent killer. Now, at a 0.5 percentage point, I think they are also saying that if this is not going to be a budget of austerity, because we do still see expenses growing, we haven't actually seen, the rate of expenditure being cut back in negative territory. So we do still have a budget that is expanding in that sense. Without that, it does mean we have to then tackle the revenue angle. We know that to really square the fiscal circle in South Africa, we can either raise borrowing, which I think from budget take one, we saw that government didn't really want to raise borrowing in an environment where we have so much volatility in the global backdrop. We could potentially scale back on expenditure. And even with this, reiterated budget, we didn't see expenditure being scaled back significantly. We can grow our way out of the problem, which I think is something that we will be able to do over the medium term as some of our structural reform efforts start to bear fruit, but it's not necessarily where we are today. And then the other lever was, of course, on the revenue front.
Right. I want to ask you about this just from a practical point of view in terms of the VAT increase. How difficult is it for businesses and consumers, in fact, as well, to adapt to the change, particularly when you've got one sort of a half a percentage point at this point increasing and then have another one potentially on the cards happening again next year?
It's a bit of an administrative nightmare, I would say, to put in, smaller increments over a longer period of time. So I think for businesses, there will be some sort of administrative cost. Of course, for consumers to spread it out, it does alleviate the pain on consumers' wallets. So I think what is good for the consumer is a little bit negative for businesses. I think what's a bit difficult for consumers to ascertain is once this VAT rate kicks in, as a consumer, we won't know which items have also been escalated just because a retailer wanted to put up the prices. So it is a bit of an opportunity for retailers to put up prices in other areas of the consumer basket, not necessarily just looking at, the VAT items.
Right. Do you agree with the decision not to increase corporate taxes?
Yes. So I think, if we look at what's happened globally, we want South Africa's corporates to be as competitive on a global comparative as possible. And so back in March of 2022, they announced that they would be lowering the corporate income tax rate. That then became effective in March of 2023. And I think that's the best thing to do. So in South Africa, we know that the effective rate that corporates pay is actually quite a bit below that statutory rate. And so how we get to close that gap is effectively through the mechanisms that the South African Revenue Service has been pushing forward, such as the base erosion and profit shifting, which is really trying to ensure that multinationals don't evade tax in either jurisdiction that they're operating in. So I think on the corporate income tax front, the direction here should be on the way down rather than up. And that's really to grow a healthy corporate sector in South Africa that can be competitive on a global scale.
It was interesting. SARS Commissioner Edward Kiswetu looked like a very happy man after the budget yesterday. But there is a perception that government is trying to squeeze every possible last cent out of the middle class. And that, you get these messages from time to time. Even though you know you're a law-abiding, tax-paying citizen, you feel persecuted to some extent. I mean, is this perception true that the middle class is under that particular kind of pressure? while government is not doing enough to address the issue of the shrinking tax base and expand it?
I don't think that perception is altogether wrong. And I bring it back to that issue of the bracket creep. So we've seen that silent killer attacking the middle class over the number of years now. And we don't really see that coming through in the headlines. So, that non-adjustment of the income tax brackets to reflect what's happening in inflation is essentially what takes more and more money out of the pockets of middle income consumers over time. Another thing is that we haven't really seen massive incentives to save in South Africa. So consumers get hit from both angles in that respect. And I think, that middle income class is essentially who is paying, the bulk of the tax ultimately in South Africa, given that we've got a very narrow tax base here. And so we are quite reliant on the personal income taxes that come through from that group.
Right. May I touch on the two-pot system while we're talking about savings here? A lot of relief for some customers who clients of yours, I imagine, who would have wanted to say, well, I can finally get my hand on a little bit of that money that I've saved and do something useful with it. But not a lot of guidance for people necessarily on what to do with the money they're able to access. I've heard some horrifying stories about what that money is being spent of, but others are saying, well, I'm using it to pay off debt or start a business. What would your advice be in that regard?
So in terms of those two-pot withdrawals, I think ultimately the reform can be quite positive. And the idea behind it was to open up a little bit of, financial leeway for cash-strapped consumers that didn't necessarily want to over-indebt themselves. So I think from that perspective, it can be, a good idea to implement. Where it becomes negative is on the consumer literacy around how to use those funds. And so we've seen some data suggesting that a portion of the funds have been used to pay down certain debts like clothing accounts or to even pay off school fees. And there are other sets of data that suggest, if we saw from the South African Reserve Bank for the fourth quarter GDP numbers, there was quite a big boost in clothing spend and recreational spend that came through. And that gives us an indication that a portion of that spend actually didn't go towards paying down debt, but it rather went into buying discretionary good items or, in that recreational space in terms of services spending. And that's not necessarily a very positive thing for consumers. I think we do need to ensure that there is a little bit more financial literacy around what it actually means to use these two-pot withdrawals now and what that means for your retirement ability later on in life.
All right, need to exercise a little bit more discipline there. Let's get down to some of the nuts and bolts now of how the minister carved up his expenditure in the budget. Infrastructure, an interesting one, over R1 trillion being spent on huge infrastructure projects. What are the spin-offs expected to be, Sanisha?
Well, we were very relieved to not see that, the capital expenditure budget didn't actually get scaled back this time around. So what we've seen in previous budgets, it's the easiest thing to do is to take away from the capex budget and to put more into what we call recurrent expenditure, which is things like the compensation bill. So I think this time around, there is a concerted effort from government and an acknowledgement that infrastructure is the main lever of economic growth for the next couple of years. And so if we look at what has happened to private investment spending over the past decade, the growth rate here has actually been in slightly negative territory. So things like capital stripping have happened. If we look in the public sector, you only need to look at the state of the roads and the infrastructure to know that we haven't been spending enough on maintenance. And so we've seen, massive maintenance backlogs in things like water. We've seen it in electricity with a lot of the older fleet just, toppling over when the demand gets too high. And I think that if we look at our fixed investment spend as a share of GDP on the private side, sitting at about 15%, we punch way below our weight relative to the global average of about 26%, and even low against the upper middle income country comparison, which is sitting at 34%. So I think there really is a concerted effort and acknowledgement from government to say that we need to involve the private sector a bit more in order to get infrastructure spending higher. And this is really going to be, the main leg of growth going forward in South Africa.
I'm keen to hear what you thought about the blended finance models being proposed in relation to these water, transport, digital infrastructure projects. I mean, do you think the private sector is going to buy in?
Definitely. So I think, the private sector has been looking for things like green bonds for a long time. We saw that Treasury announced that there will be an infrastructure bond. They didn't really give a very clear timeline around that. But I think where the private sector would like to play is if these bonds are allocated to very specific ring-fenced projects where you have a bit of certainty around the revenue proposals out of that project, where the transparency is quite high and, for that particular project, there's a lot of accountability. There may also be some kind of guarantee that then backs it up from National Treasury side. And I think this is where the private sector would be quite keen to get involved. Where the private sector wasn't keen to get involved in the past is to just give money and that goes into a big pot and we don't know how that money is actually spent. Yeah. So I think by ring fencing those finances, that's how we're going to actually get around trying to involve the private sector a bit more on the infrastructure basis. They've also announced, a credit guarantee mechanism that they're trying to put in place. They are piloting this in the energy transmission space. So we know that in the energy sector, we are sorting out generation. The next big problem to tackle is on the transmission side. There are a lot of people that want to put through renewable energy projects, but can't do so because we don't have enough transmission lines. And I think they're hoping that this credit guarantee mechanism will be a way to involve the private sector. If this is successful, they will then roll this out to water projects and logistics infrastructure as well.
Let's talk about energy for a moment. And I just want to look at the picture around Eskom. Eskom starting to reduce its dependency on government here. Well, it's taking a bit of time. But on the other hand, you have a company like Transnet, which still seems to be a huge drain on state resources.
And I think this speaks to a bigger theme in South Africa. We always thought that if we fixed Eskom, we would fix the energy problem in South Africa. And we thought if we fixed Transnet, we would fix the transport and logistics issue in South Africa. And that's not necessarily the same thing. So I think what can be good for the logistics sector may not necessarily be good for Transnet. So crowding in the private sector and allowing third-party operators to generate revenue will actually take away from Transnet. It will actually grow the logistics sector in totality for South Africa, but it might actually be negative for that monopoly structure of Transnet. So I think, going forward, we need to see a few more amendments coming through for Transnet. Last year was quite a big year in terms of a number of legislative changes for the logistics sector. In December, late December, when everyone was on leave, we actually saw the network statement coming through, and that was a couple of weeks before people thought it would be produced. This effectively allows third-party rail operators to come on stream. I think they may still tinker around with things like tariffs and who's responsible for the backlog of maintenance, but we are getting there. I don't think it's going to be a quick fix, so this year we're not looking for massive improvement on railway volumes, but I think in the next 2 to 3 years we should start to see more private sector participation there. I think if you had to look at where, Eskom was here a couple of years ago, but now we're actually seeing quite a lot of improvement coming through. And I think this is where we are in terms of the stage of legislative and private sector participation changes in logistics.
All right. So that's positive. Something that I think is less positive, that plays a lot on people's minds, the public sector wage bill. We speak about that year in, year out. Last year, the Centre for Risk Analysis pointing out that South Africa has the third highest global government wage bill as a share of GDP out of 20 major global economies, yet service delivery is still compromised. How do we solve this wage bill issue?
Yes, so something we definitely don't want to be top of the list for.
Certainly not.
So if we look at the wage bill, it's the composition of that is how many workers we have, and of course the wage increment that the workers get. Yeah. And so what we saw in this budget was a 23.4 billion rand overrun. And we are still awarding the worker base, CPI plus. And so that tells us that this wasn't necessarily a budget that really did extensive cutting back, and it's not really an austere budget. In terms of the compensation bill, you can make the argument that certain departments need more workers, as they've explained with the frontline workers in essential services, for the police force, for the health sector, and even on the education space. I think there's a real argument to be made that we do need more professionals in those areas to match the population growth that we've seen in a number of urbanized areas in South Africa. In terms of the wage increment, I think a lot of work can be done here, not necessarily on the base salary, but in terms of the allowances. And in some cases, the allowances make up around 30 to 40% of the total wage package. And I think this is something that government hasn't fully tackled as yet. So we often talk about, trying to get a 3-year wage settlement in place to reduce the uncertainty of the medium-term framework. They've spoken about trying to have early retirement, but they're only expecting about 11,000 workers to take that up, and we'll probably only get savings of around 7.1 billion. So I think, in the greater context, to make a big significant change, I think they really need to look at the allowances aspect of the wage bill.
Let's talk about a bit about municipal debt. I mean, the related inefficiencies, similarly worrying. I'm just wondering whether government is able to bring these municipalities in line and, most importantly, increase the kind of debt collection that we need to see in order to make those municipalities profitable, turn them around.
The municipalities are a huge bugbear of the economic recovery in South Africa. We've got 257 municipalities. 71 of them are on a program to try and work out some form of debt relief. We know, for example, that some of the municipalities owe certain entities massive amounts of money that won't necessarily be paid back. We know that consumers owe municipalities a lot of money in turn. So I think, we need to see some reforms in this area, and a lot of that is going to be addressed under Operation Vulindlela's Phase 2 projects. So Operation Vulindlela is essentially a project office that sits between the presidency and National Treasury, and they're really there to tackle the regulatory red tape to fast track a lot of the structural reforms in areas of the economy that deal with things like the network industries and like municipalities. Right. In terms of what they are planning to do here, they are trying to get more professionalism into the local municipal level. So I think there are two key areas of concern with local municipalities. They are actually, contrary to what we think, understaffed relative to population group. And they also haven't been spending a lot on capex. So capital expenditure over the last decade or so has actually just flatlined. They don't have the necessary skills in place. So I think by professionalizing the workforce, and that's going to take some time because it will really be applied to the new workers rather than the full workforce. I think that's a step in the right direction. And the second quite positive thing that we heard is that they're going to try to ring fence the revenues they receive for water and electricity. So that means it won't just be put into a big pot and then used however the local municipality wants to use it. That money will then be going straight back into infrastructure for water and straight back into infrastructure for electricity. And I think, small little reforms like this can have quite a big multiplier effect on the local municipalities in general.
Just a side note about water here. Quite a lot about water infrastructure mentioned in the budget yesterday. Maybe no short-term relief for those of us who have been experiencing water cuts and so on. What do you think about the long-term picture, though?
So I think the long-term picture definitely looks a lot rosier with the legislative changes that are coming through. So we had the water bill also being passed last year. So this will essentially allow private sectors to sell water just like a municipality would, if of course they tick all the right legislative boxes. Right. So I think there is, more concerted effort to relook at the quality and the supply of water. They are also looking at bulk water infrastructure projects. So something like the Lesotho Highlands Phase 2, that's been a project that's been quite delayed, but it's finally coming through. So I think on the supply side, things are starting to improve. On the quality side, they've reinstated what they call the green drop and the blue drop report. So as scary as some of the figures that come out there suggest what the quality of water looks like for wastewater treatment and drinking water, we at least have some sort of assessment and our finger on the pulse of what's actually happening in the water space. I think by involving the private sector more and more, this is a trend that we've seen now in energy, logistics, and in water. We should start to see some improvements there. In the short term, however, I do think that water shedding is still going to be the lived reality of South Africans.
I mean, I'm jumping about a little bit here, but just to get to some of the most important focal areas, watching the other politicians, some of them in the GNU and others not, commenting on the issue of small businesses. We're looking to small businesses to grow our economy, widen the tax base, etc. And of course, we're looking for industrial policy to be created to support that project. Were there indications of enough support in this budget?
Sadly not. So I think, when we had the State of the Nation earlier on this year, quite a lot was said about small businesses and the support that government needs to lend in that area. We know from the World Bank, as an example, this is the best way to up job creation in South Africa, yet we are not actually funding it in the way that it should be. So what we've seen from government is about 2 billion rand allocated for small business development. That's really to help about 120,000 small businesses. So yes, it's, it is something, but we do need to see this on scale. If we look at what happened during the COVID pandemic, between 2019 and halfway through 2022, 89% of the job losses actually came through from small businesses, which talks to the problem of insufficient financial support. Broader than that, there's also a skills issue. We've just spoken about municipalities. I think the infrastructure is also not supportive of small businesses. So there is still quite a bit that government needs to do in order to address, the low participation rate of small enterprises in South Africa.
To jump from that micro picture to one of the most important aspects, I think, of the macro picture is a very scary figure the minister reminded us of: 22 cents out of every rand going towards servicing our debt in this country. Are you satisfied that we are moving towards stabilizing that over the next couple of years?
I feel a bit optimistic about the trajectory on the fiscal side. So if we had to look from where we come from, let's say 2008 global financial crisis, South Africa, from its emerging market peer group, did have one of the largest deteriorations in the debt ratio, and then of course a consequence of that, the debt burden, which is the interest bill. Now, I think that going forward, given the last couple of budgets have shown that we need to try and get our fiscal house in order, there's a lot more robust debate about cutting back on expenditures, which projects go through, etc. I think if we look at the rate of deterioration relative to what we've seen in the past, that is now starting to slow. And it's not necessarily the picture that we're seeing in other emerging markets. So the World Bank showed in their Global Prospects report that there were about 60 to 65% of emerging market economies that were actually seeing an expanding deficit over the next couple of years. So we actually in the minority group there, where we're actually expecting to see the fiscal deficit going from around 5% to about 3.5% over the medium-term framework. Now that's actually quite decent, given that if you look at the US economy as an example, struggling with the 6.5% deficit there, tackling public debt of 120% of GDP. So, in the context of an emerging market country like South Africa, where government still plays quite a big role in bolstering economic growth, having a budget deficit that goes from 5 to 3.5 is not necessarily so bad. And, if we look at Budget Take 1 to Budget Take 2, there was a concerted effort to keep that debt stabilization pattern in place. It was marginally higher, but if you look at the fiscal deficit ratios that are projected and the debt stabilization numbers, very much in line with what they had in fiscal take 1. And I think that speaks to the fact that even though there has been this contentious issue of VAT, all the partners belonging to the Government of National Unity still believe in trying to achieve a primary surplus in the medium-term framework, still believe in trying to stabilize debt.
Right. I mean, there are situations and circumstances within our control, and there are those without. And I think one of the main things right now is the international developments, like the Trump presidency. How easy is it to accommodate for those unpredictabilities?
I think it's far easier when your economy is on a stable platform. So, I mean, we've come out of quite a poor growth year of 0.6%. I think that was below what most economists expected, primarily due to quite a big drop in agriculture, and it didn't really bounce back as quickly. I would say, however, that I think we are going to see a bit more of a local cyclical upturn going into this year. Average inflation for this year is going to be a little bit lower than what we experienced last year. So that should help consumers. Consumers have, a little bit of that two-pot withdrawals that they can use for spending. We've got a little bit on the employment side. We've also got, interest rate cuts that are now starting to have an impact on consumer spending with a bit of a lag. We've seen that, on the fixed investment side, there has been some reaction on business confidence coming through on the back of the Government of National Unity. So I would say that the cyclical factors look like we are starting to see some form of a recovery. However, on the global front, we've got this massive risk that is posed to our exports, and that's really coming through a deterioration of foreign affairs, the fact that, we're living in a world of higher protectionist levels. And so, tomorrow we could get, tariffs being implemented at the rate of execution of orders coming out of the US administration. And that, of course, can detract from growth. So it's a bit of a tricky place that we're operating in. I think, a cyclical upturn in South Africa, but we are still, operating in that global context. South Africa is a small open market, and it's very difficult, to not be affected by things like a high level of protectionism, the potential for a global trade war, and what that could mean for our exports.
I want to ask you about something that consumers often complain about as we approach the budget, especially when you've got a VAT increase on the cards. The issue of corruption. And we know that this is a tap that at different times of the whatever government is in power is flowing slightly differently, but it's always open. And I think consumers are very concerned about the blunt object sometimes of VAT being used to increase taxes when the corruption tap is wide open and flowing. But we don't get a sense of that in the budget, Sanisha. We don't get a sense of how much is being lost to corruption while the finance minister is trying to scrape through and bring in revenue from other areas.
100%. And, that's a very big dark cloud that hangs over South Africa to try and eradicate corruption. I think we are making some changes in the right direction. So as an example, South Africa has now ticked off 20 out of the 22 outstanding action items from the Financial Action Task Force on the grey list issue. What we have left to tackle is, of course, issues relating to money laundering and terrorist financing, which are the two biggies on that list.
Yes.
But if we take that into account and the changes that have happened there, if we look at the budget, there was a bit more given to SARS for this year. I think it was about 3.5 billion, another 4 billion in the medium term, in order to, gear up their capacity and personnel to start, closing tax loopholes. We spoke about tapping the middle income when, there are these tax loopholes that exist. And I think SARS has done quite a good job in terms of using artificial intelligence. They actually said they managed to avoid about 60 billion rand in fraud in the last fiscal year. And I think that's quite a game changer, that we're starting to see some efficiency gains around the collection of revenue, partly because of the digitization issue. But I think that funding that has gone to them in the past from Treasury, bolstering up their personnel, is starting to have a bit more of an improvement. SARS is also clamping down on things like illicit tobacco, as an example. About 20 billion years actually been saved. There's about 100 cases in court now that they've actually managed to capture. So some changes are happening on the fringe. If we look at the asset forfeiture unit, which is within the National Prosecuting Authority, they've basically seized about 14 billion rand worth of assets that are related to state capture. So there are these isolated good news issues. Of course, there needs to be more government willingness to root out corruption in the longer term.
Yeah, you made a reference there to the grey listing issue. Do you expect us, or do you hope we'll be off that grey list come October?
I definitely think that, we are moving in the right direction. With 2 outstanding action items, I think that final report is done in June. So I think there's a very high probability South Africa will be removed from the grey list come October. Yeah. In relation to the grey list, you can also talk about sovereign ratings. So, in South Africa, we heard in November of last year, Standard & Poor's Global Ratings came out and actually put our neutral rating onto a positive outlook. And I think that was a step to confirm that we are doing the right things on structural reform. They said to actually get an actual outright upgrade, we would then need to see more fiscal consolidation measures going into the medium term and further progress on structural reform that actually benefits a higher level of growth. So I think, it was a bit of a stamp of approval coming through from them. Even the International Monetary Fund, when they concluded their Article 4 on South Africa late last year, they also said that we are starting to move in the right direction in terms of progress on structural reform efforts. They cited energy, but also mentioned that we are doing some things in the areas of logistics and even in the water space. Moody's came out earlier on this year also corroborating that issue, that we are actually making some steps in the right direction to bolster economic growth prospects on the back of the structural reform efforts that have come through. So I think we are starting to see the dial switching to a bit more of a positive trajectory. But as you've mentioned in the past, that the global picture does also have quite a significant sway over South Africa's fortunes.
I mean, linked to this corruption issue and perhaps tightening our belts is this call for a pending review, or a spending review rather, that I understand is going to take about 6 months to complete. I'm just interested to know what is that going to entail, Sanisha, and what's likely to come out of that?
So this was a great piece of news that came out in the budget. So the spending reviews have been conducted from around 2013 onwards, but we're now starting to see the fruits of those structural reforms coming through.
Right.
So the spending reviews basically looks at how they can cut out wasteful expenditure in various departments. So it can span from looking at overtime pay to what they pay for accommodation. They've even looked at the police fleet management as an example. So they've mentioned it's quite difficult to actually calculate, total savings, because they're not quite sure if some of these savings are going to be recurring or if it's going to be a once-off. Right. And on the back of that, you can't really allocate that money to a project. But I think, we can see substantial gains that are likely to come through from here. There are about 240 spending reviews. This process is expected to be completed or at least reported on by September. It has caught the attention of the president, and he wants to get Operation Vulindlela, into play here as well. And given Operation Vulindlela's really good track record, I would expect to see some gains coming out of these spending reviews.
So just to be clear on what exactly they are, they're audits essentially.
They are essentially audits.
To help us save money wherever we can.
100%.
Right. Okay, well that is very, very positive indeed. So thank you for watching patiently up to now, and clearly you have been engaging with Sanisha's content because you're talking to us, and I'm going to take some of your questions right now. And if we can start with this question from Greg Stewart. Greg says, while average public sector salary is over 40,000 Rand versus a private sector salary average, which is 26,000 Rand, how can there be additional tax money allocated towards the 3-year wage deal while taxpayers are squeezed for more tax? Perhaps the opposition party should be leveraging their support for the budget to reduce government wages. Sanisha, your thoughts on that?
100%. So we know that, the government wage bill takes up about 40% of non-interest expenditure. So it's one of your biggest line items, and it does need to be tackled. Of course, we have COSATU, the labor unions, to deal with. So this is, economically speaking, would be the best thing to do. Politically speaking, a very challenging thing to do. And we're seeing that from all expenditure fronts, which is exactly why we had Budget Take 1 and Budget Take 2. We didn't have an austere budget, and Treasury basically did not want to raise borrowing in an environment where we have all this volatility. And the only way to then square the circle was to raise revenue. So I think, there was a big sort of sentiment push out there to say that we need to start scaling back on the expenditure. And if we don't, it means more revenue proposals will be forthcoming in the medium term. But 100%, we've seen that there is massive overspending in the public wage bill. And as I mentioned, it's not showing budget austerity when you have CPI plus agreements for your public sector workers. But again, it's a huge political challenge, and we're contending with the labor unions in South Africa.
Yeah. A very good question on LinkedIn from Tafatswa Ruziwe. He says, I'm worried about privatizing water, rail and energy. See Thames Water in England. Rail has recently been renationalised. Why are we going where the British are coming from? I think if you've been in Britain while this has happened, it's been fairly chaotic, right? And it certainly has caused so much disruption that you do wonder why we're considering this.
So if you look at the railway systems across the globe, the UK and SA sit in the same bucket in terms of its performance and non-performance, I should say. Mm-hmm. So we're going back to that model that they are leaving for the very same reason, because we haven't actually seen the public sector, promote the logistics sector in a way that can actually grow the economy. So, in the railway sector, we're sitting with volumes of around 160 million tons. We hope to maybe get that to 170, 180 million tons by the end of this year. This is nowhere near what we need to actually grow the economy. We need to get something around 250 million tons. So, the government has had a chance, and I think the direction South Africa is moving in is to break down these monopolized structures and to get the private sector in to actually start, seeing some improvement. We've seen a huge backlog of maintenance at Transnet, as an example. We've seen it also playing through at Eskom. And so that is why we do need the private sector to get involved, to see efficiency gains coming about and to actually boost levels of productivity and profitability.
Right. Thank you very much for that one. And okay, we're back to the VAT issue here, Sanisha. ST Opperman asking, do you believe there was a better alternative than increasing the VAT rate to reduce the budget deficit?
Yes, I think they should have cut expenditure. But if that wasn't on the table, so if we had to look at all the revenue proposals, We wouldn't necessarily want to increase corporate income taxes because we want our corporates to be globally competitive. We wouldn't necessarily want to increase personal income taxes. So in South Africa, we've had about 6.6 million assessed taxpayers as of March 2024. It's a very narrow tax base in the context of our population. So that means that, if we had to raise that marginal tax rate of 45%, we would then look like a complete outlier relative to the typical upper middle income country. So we talk about, the Laffer curve in economics. So you'd want to increase the tax rate in order to increase revenue. But when we're sitting at such a stretched margin, raising that revenue could actually lead to more tax avoidance in South Africa. Yeah. Wealth taxes, again, a very small grouping, a lot of concentration, the same thing with the luxury goods tax. And so, the only real lever on the revenue proposals was essentially VAT, because it's got quite a broad tax net. And so it's, people have to go out and buy goods. If it's something like personal income tax, it can be avoided. The same thing with luxury goods tax. And so I think that's why they use the VAT lever. But of course, if all the options were on the table, I wouldn't have opted for the borrowing. I wouldn't have opted for the revenue. I'd opt to grow our way out of the problem and to scale back expenditure.
I'm going to start wrapping up, Sanisha, because we've covered quite a lot of ground here. Let's take a quick question from Tanya Myberg, though, asking, is the 16-day time frame referring to working days or calendar days?
It's my understanding that I think it's working days, but I do stand to be corrected.
Okay, all right. In that case, let's take one from Greg Stewart as well. Not a single mention, he says, in the budget of small businesses, and yet the minister says that the most important debate is to decide where economic growth comes from. Should there not have been a far bigger allocation in the budget to growing small businesses than increasing already high government employee salaries?
I do not disagree with that at all. So, what we've seen in the budget is 2 billion rand for the medium-term expenditure framework to bolster the prospects of 120,000 small businesses. It's just not enough. So we really need to see, an emphasis on small businesses, on how to improve the financing structures for them, the operating environment for them. And that was just, a drop in the ocean, I think, in order to try and get some more activity from small businesses.
Let's take a last question from Tafadzwa again, who says fixed income makes up a significant portion of Momentum's revenues. Why would Momentum want a cap on its interest income from bonds?
Tafadzwa, I'm not sure I'm 100% understanding your question, but if you look at where South African bond yields are today, we've got quite a bit of, I think, fat that's in there for a fiscal risk premium and a political risk premium. And if we compare South African bonds relative to the emerging market universe, we get quite an attractive yield. I think there's obviously, a risk further out as government's redemption profile starts looking quite hefty in the next couple of years. But in terms of a comparative from an investment perspective, South African bonds do look quite favorable.
Right. So, Sanisha, we're going to wrap it up at this point. Just some final thoughts now that the first step of the budget really is finished. Where do you see things? How do you see things going from this point onwards? And what will be required to make sure that we stay on track with what our leaders hope to achieve together with the public sector and labour?
So it's a bit of a wait and see approach now to see how the parliamentary committees shape up, what comes out of the joint committee meeting tomorrow, how they operate within that 16-day framework. And then, of course, it's a 7-week period after that in order to actually sign off on some kind of fiscal framework and amend what has come out. So I think it's going to be a little bit of a, we spoke about the technical process and the political process.
Yes.
I think we're quite happy with how the technical process played out. And now we're living through the political process. It is going to be a test for the government of national unity. Can the partners find each other in this process? And we've seen that coming out of the Expropriation Act, the Bella Act, in part the National Health Insurance. And I think this is going to be another one of those tests for the GNU.
Certainly so. And of course, it takes a great deal of maturity because working together requires not only holding each other to account, but compromising as well when necessary. So I think we're going to see a lot more of that coming through. Momentum Investments Chief Economist Sanisha Packirisamy, thank you so much for your insights into the National Budget 2025, beautifully unpacked for us. For those of you who joined us online, thank you for sharing your excellent questions. Thank you for your participation. I hope our conversation has been useful to you as a South African. From me, Joanne Joseph, thank you for joining us. Take care. Bye-bye.